So when someone's buying their first investment property, I'm wondering, what is your top criteria? Is it location? Is it price? Is it the cash flow potential? What are some of the check boxes that you look for?
Yeah, the answer to that is yes to all the above.
Hmm.
So I play the long game. So you've heard of like flippers and stuff. They're going to buy houses, renovate them, and then immediately sell them off. That's a different consideration. I'm looking at 20 to 30 years, potential. So the main criteria would be I want to buy in a place that I know is going to be improving over the next 20 or 30 years, or at least I suppose it will be improving, right? So some key indicators is like, are companies moving there? Are the laws and the environment conducive to people moving there? And is the area growing? Like, are you seeing high population growth? And that's not like too difficult to determine. So if you look online and you look at like best places to move, you're going to find basically the best places to buy real estate, right? It's really not all that complicated. It kind of works that out for you. The next part is, cash flow is extremely important. So you want to make sure that you cover all your base expenses for the property, and then you need at least a little bit extra. So some things people don't really think about are like repairs end up costing a lot of money. If you're keeping the property for 20 to 30 years, you're looking at things like roofs, right, at some point, which is expensive. It's in like $10,000+. So you want to make sure that not only are you covering the cost of the property with like, paying the mortgage, insurance on the property or whatever else you have, but also unforeseen stuff like repairs and occupancy problems, right? So if you have like turnover, that's an unforeseen one. So you at least want your cash flow to kind of cover that. And then I prefer a little bit on top of that, right? So another big one I just thought was taxes, right? So taxes are a big one you have to think of as well. So you add all that stuff up, you figure out how much you have. You want to make sure you include things like the general rule for repairs is 1% to 2% of the property's value. And then occupancy rate, people generally do something like a 90 to 95 for long-term, 60 to 65 for short-term rentals. And then once you figure all that out, you want the end income to be higher than that. But yeah, that's about it.